Tech's pain is healthcare's gain, according to Barclays at least. Well, and the market yesterday. Look, while investors were dumping shares of NVIDIA, names like CVS and Cigna were reaping the benefits. And Barclays says buyers are getting them at a discount because healthcare was down nearly 11% in the fourth quarter. A lot of that on election policy concerns. Joining me now is Andrew Mok, Director of Equity Research covering the U.S. healthcare space at Barclays. So, Andrew, a lot of people are loath to go into a sector that has chronically underperformed. Why could now be a bigger tipping point?
Well, I think thanks for having me, Kelly. We saw NVIDIA lost $600 billion in market cap yesterday, which clearly impacted the tech sector down almost 6%. But we didn't see that pressure directly impact the rest of the S&P 500, which you often do see during big volatility events. So ultimately, we viewed that as a positive indicator for healthcare, and any potential weaknesses that start to form in the broader AI narrative will prompt investors to revisit their thesis and sector allocation, which could benefit underweight sectors such as healthcare.
We saw nice moves yesterday in the facilities like HCA, the services, Cigna, CVS, DaVita. I mean, even as I list these names, I can sort of think of the warts on all of them, you know?
Yeah, and there's no doubt there's reasons why this sector has been underowned for the past few years. First, you've seen the big tech allocations rise alongside AI, but we have seen big fundamental cost and reimbursement issues in the aftermath of COVID, particularly in government health insurance programs like Medicare and Medicaid, which has led to negative EPS revisions throughout 2024 for a number of health insurers. So, the headline risk so far has been real. The post-election policy uncertainty is high, and the market was quick to price in a lot of that uncertainty. But there are reasons to be optimistic, particularly on the managed care side.
Sure. Before I dive into that, I just want to note, we can show the one-year performance of some of the group. Look, DaVita's up 65%, so that people would be thrilled. Is that a name? Which are the names that screen the best for you, where you think you'd have the highest conviction?
I think the names that screen the best for us, at least, lean on the managed care stocks that are under-owned today. Fundamentally, health insurance is a short-tailed insurance product, so any mispricings in one year can be corrected through pricing actions in subsequent years. Right now, the market is capitalizing depressed earnings stream across a number of health insurers, and those margins are now entering a recovery phase driven by more stable utilization patterns and upward revisions to reimbursement. And a couple of key important developments have already occurred in January that should help to restore investor confidence in health insurance. Earlier this month, CMS released the 2026 Medicare rates, which was the best rate we've seen in 3 years. So that's a big positive catalyst and a very bullish sign that should help accelerate the margin recovery efforts at companies like CVS, Humana, and United.
Interesting. Final question then. What if I own this space, but the rest of the market gets its mojo back? We get positive AI momentum. We're back to, maybe earning season as catalyst. I don't know. Can I only own them if the big stories, the big leading stories fall apart?
No, I think fundamentally you are seeing the recovery. Like I said, the margin should be better over the next few years in these managed care stocks that are under-owned today. And I think the part that was so assuring yesterday is that you just need people to start doubting the sector allocation and rethinking those investment strategies, right? Just having this, having slightly lower conviction levels in AI forces investors to rethink their sector allocations and revisit their confidence levels across healthcare. So, yes, I think the fundamentals and the fundamentals are on the recovering side of this, and I think any doubts in AI should help healthcare broadly.
S&P was down 1.5%, healthcare was up 2%, and we'll see if the rest of the year's performance follows suit. Andrew, thanks so much for joining us to dive in.
Thanks for having me.
Andrew Mok.